Back with the India market close right here on NDTV Profit. Time for our bull versus the bear segment. And I think the opinion on this one is so divided that it's just the perfect candidate for this segment. And the stock that I'm talking about is Dixon Technologies. That management has reaffirmed its confidence in the long-term growth trajectory, even as it acknowledged near-term challenges, including increased competition. Puneet is here to present the bull and the bear case. Puneet, over to you.
Well, thanks so much for that. It's definitely interesting. For the first time, I think, since the company is listing back in 2017, that competition has been one of the key challenges in the near term. And that's one of the key reasons why we're picking this up. Because while in the bull case, the management held an analyst meet with the brokerages yesterday, affirmed a 40% growth for its largest client, Motorola. They will be manufacturing 1.4 crore smartphones in FY26 for them. But they acknowledged, as you rightly said, that some of the volumes for Motorola has now shifted to another EMS player, Carbon. And Carbon used to earlier manufacture the feature mobile phones, essentially, if you remember, over a decade ago. They've now transformed into an EMS player. They're also compliant with the PLI norms. So they can pass on some of that benefit to players like Motorola. And this is the first instance where some of Dixon's volumes actually shifted out for the first time over the last 8 to 9 years. So it's definitely a pivotal moment for the stock. Let's also look at the second bull and bear case about this, because apart from Motorola, they also cater to clients such as Oppo, Vivo, and Xiaomi, which altogether control almost 50% of the mobile phone market. They are looking to add 30 to 70% of volumes from these players going forward, and that's the second bull case. But the key aspect is, of course, competition and taking forward that discussion from Motorola to players like Vivo. Vivo has empaneled someone like Micromax, which is also an earlier avatar of the mobile phone company, which was well known. They've also transformed into an EMS company now, while Oppo has players such as Optimus as well as DBG, which are the other two EMS players that Oppo is empaneled with. So definitely competition will be there. And the sole advantage of pricing and low cost essentially won't be the only key differentiator now. The third bull case for Dixon Tech, of course, is what brokerages are estimating. Kotak is saying that both IT and the telecom, which is new verticals for the company, will generate 15,000 crore in terms of revenue by FY28. This will translate to roughly 15% of the consolidated revenue. But it's notable that this is almost double the margins of something like the mobile phone, which operates in the 4% range. So while the revenue will be only 15%, the susceptible impact on EBITDA and profits will be much higher. But currently, the concentration of mobile phones is the highest. And within that as well, Motorola was 72% of the company's mobile revenue. So definitely a shift to Carbon will impact the company. Now, finally, in terms of valuation, and here it was very tricky one to put the valuation either a bull or a bear, because it is an investor's choice essentially of what they want to pay for a stock. 47 times price to earnings is not at all cheap by any means. It's much higher than some of the paints companies that has been in focus, as well as FMCG companies. But it's the growth that the company is promising year on. Currently, stock trades at over 100 times. So it's essentially doubling revenue in 2 years. Margins, of course, will follow through. But the increased competition, as well as falling, the component side of things as well, because they are failing to increase the component side of the business, which the company is banking on, will be one of the key aspects to watch out for. So overall, a lot of positive for the company. They're estimating really strong growth in mobiles as well as other segments like laptops. But will the increased competition and valuation deter investors? It doesn't appear so today or in the last 1 year, but going forward could be a very, very interesting space to track.
Most certainly. Thanks so much for that. And, Puneet, thanks for bringing that. And Kunal, it's safe to assume, right, that when it comes to this stock, maybe a DACE, maybe Interglobe Aviation and a few others, there is always a bullish view and a bearish view at the same time. Maybe because of the valuations, because of the size, the number of holders, etc. And I'll take that question with Pankaj. But to you, Kunal, I want to ask that it's had a choppy week. It's ending this week on a high. From a trade perspective, either short-term or positional, what would your view be on Dixon?
I think, Neeraj, on Dixon, my view on the technical charts, or even on the long-term charts, what I look at, the view is sell on rise. Whatever bounces you get, that would be an ideal opportunity to create short positions. On the higher end, if I see where I have to change my view, then it will be above 16,000. If the stock surpasses that level, then we'll say that there is a change in trend. But I think any bounce that should be utilized as a selling opportunity. I'm expecting lower levels for the stock. The stock can test the levels of 12,000, 11,500 on the downside.
Pankaj, do you have both the bull and the bear view on Dixon? Because I wouldn't be surprised if you do. It's just that kind of a stock.
So, Neeraj, we carry a positive view on Dixon. We have got a target price of 20,000. Reason for liking again is high growth. So nearly 40% kind of a top line growth and 65% kind of a growth in bottom line. Our key this thing is that value addition, which is at about 18 odd percent, is expected to reach up to 35, 37 odd percent. Given the fact that asset turnovers are very high, so if a company is able to pull up the margins from say 3.9 to 4.6% because of components like display and camera module, I think that will sort of lead to far more better growth in the bottom line. So that remains a key to us. I think overall this space is a high growth space. And Dixon, we feel that despite the rich multiples, is quite attractive given the pretty high growth prospects. And I think besides mobile, which is 75%, the other segments like say laptop and refrigerator, I think those are also going to sort of contribute fairly. And I think on the export side also from mid-single digit overall sense is that that will go up to somewhere about 15, 16 odd percent. So it's not only the domestic segment, which is going to be the anchor driver.
Okay. More Voices Coromandel was the company in focus.